The following is a presentation of TFNN. It is now time for Trade What You See with your host, Larry Pesavento. Now, Larry Pesavento.
Hi folks, Basil Chapman sitting in for Larry Pesavento, and I do not trade the different instruments that Larry does, but I analyze them all the time as part of the Chapman Wave methodology. So hopefully I can be of assistance to you, and I can go through what you would like at 877-927-6648. Let me go through some of the numbers here. And of course, Larry's normally here on Monday, Wednesday, and Thursday. Thursday's different time. It's at noon. I will be doing Larry's show tomorrow. It'll be the commodities hour. It'll be my pleasure to be doing that. And I do follow the commodities pretty closely. Still do not trade the commodities. There's enough to do as it is. So that's something that we can go through. I don't mind doing commodities today, whatever you want to ask me, stocks, futures, whatever. So trade what you see. What I'm looking at here is high-grade copper. I discussed it in my show just a moment ago. High-grade copper, it's really important for me to see high-grade copper rallying. It says that the bounce that is probably likely in China after coming down so sharply is probably affecting some buying with copper. I'm not sure exactly how that works, but the fact is that copper's at 3.528 right now. It's up 0.06, and that to me says that there's a chance that it could retest the left side high. And there's a particular technique that I use called the left side, right side price time match. It's a little late, but sometimes a little late, but still on its way. Is actually more positive because it means that it's building up even more steam. And what would happen is if high-grade copper pushed above 3.5565, the high of the 3rd, or this is the 3rd of July, in this particular move here, without making a new peak, that would be leg C. I have to then call it a leg E/C. I don't want to go back. That's the Chapman Wave methodology. But there's nothing, because I've got an alternate count, there's nothing negative about that as long as the technicals are good. And it would mean that the stochastic at 75%, if you're looking at Tiger TV, you'll see that there are two patterns. One is a pattern here, the yellow and red line above. That's the MACD, the moving average convergence divergence, and below it is the slow stochastic. Now, what's interesting is that Larry, of course, used the butterfly technique and the Gartley techniques. These are techniques that he's developed and refined over the years from the Gartley book that he read. Page 222 is the Gartley pattern that really kicked everything off. Now, what's really important about this, as far as I'm concerned, very often within the patterns that I look at, you can actually see potential Gartleys, butterflies. Now, if I had to take this pattern and I went like that and like that. Actually, let me change the color because then you'll be able to see it. Just for now, I call them triangles because although they have in look the same aspect, what happens is, set as default, what happens is that they do not go to the same parameters that Larry would be looking at. But what I do is I make the triangle, and then I invariably go to what I consider to be an important target area in the Chapman Wave. And there you can see, we have it right there. Isn't it funny, when you have, I always say, if you have a robust system, it should include every other technique. There shouldn't be a conflict if you use another system and it too is robust. If there's a divergence between the two, it says your experience has to go with the one you were used to. Stay with that. Don't change with it. And then use the other one as the alternate to say, if I'm wrong, blah, 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 blah. That's the way you do it. So my target here, even based on my technique, based on this triangle, I won't call it a butterfly here, a triangle technique says there should be at least an attempt to try to get to 3.5565 in copper. All right, so that says that the daily is improving, the weekly is kind of improving, but it's had a lot of work, it's got a lot of work, it's only in a trading range after making a huge arch formation. If it can clear 3.6 in September, I'd be very impressed, because the monthly chart is just horrible for copper. So it's going step by step, and that's how the Chapman wave works. You go from small time frame to a larger time frame to an even larger time frame. When you're getting a major sell signal, you want to see that it's corresponding to your larger time frame. For instance, in the commercial here, we're talking about CMG. That was a very nice trade that we put on. I had a peak F top. That was my monthly chart. The reason why I've considered that CMG is in a major sell mode, that it will not get to the 442.40 level, at least for a long time, is because it was doing that in the monthly. CMG's Chipotle Mexican Grill. It gave me the sell signal in the weekly, which is very important, at 442.40. Peak E top, broke the down channel support level, and we went short at 420. Should know it by now. I should know it by memory. At 414.50. Gave us an 86.60% profit. So, and then you have the daily. You see, the daily gave the peak E sell signal, but it was already in a sell mode. So that's backwards. You're looking at the major. You're looking at the tide like it's tsunami. Actually, there was a tsunami today, but so far I saw a flash go by that said there are no warnings at this time. So anyway, we're going to watch that. So it's really like a tsunami that it comes out, or the Niagara Falls waterfall. But also, look, it made a doji candle, and a silent doji the following month. So those are techniques that I use. So now when we go back to the charts, I wanted to talk about this. Let's go to I didn't do this in the last hour. Let's go to the TF. This is the mini Russell 2000 September contract. Now, what's really important about this particular contract, let's look at it on the daily. The daily is trying to test the high of 826.80 that was made on the 21st. Today's high is 824.80. There's a chance that it could get there. But you remember the technique I was talking about? Here it is. I was talking about the drop bucket. I call it's a double top pattern. The reason why it's called the drop bucket, humorously, I was looking at it when I was developing these techniques, and it seemed to me, because outside of my house there was this huge backhoe, it was just pulling up the gravel and the road and everything, and then just dropping it. So it's got this long arm, it's got this cup, the bucket formation, and then it just opens up and everything comes tumbling out. So it's this double top failure pattern. So this particular pattern, which is from my CD introducing the Chapman wave methodology, is exactly the pattern we've got to look for, because right here, why? Because you've had a cup, the slight breakout above the high of the 5th of July at 820.50. That was the high peak D, makes a cup formation. Look at all the techniques that are involved here in the Chapman wave. What we've done is, and yes, there's a question then, will I look at Apple? I'll absolutely look at Apple, because it's part of the NDX 100, very important component. I will look at it. Now, the mini Russell 2000 trading at 822.30, down 60 cents right now. When it made that doji peak D top, now look at this. This is fascinating, because why? Look, there's a huge cup formation from the high of the 30th of April at 825.10. It comes all the way down to 722.10 on the 4th of June in A, B, C, D, trough E. Let me just put that in for those of you who use the Chapman wave, trough E. The technicals were very positive. Stochastic was rallying, making a higher high in the divergence between the price and low. Look what happens. It goes, and in the Chapman wave, you look for the lowest, most obvious low bar. In this case, it's the low of the 4th of June at 722.10. And then you merely count each successively higher peak, hopefully getting to a peak D. Now, I don't say hopefully. The intention in the Chapman wave buy mode, it goes from a buy signal to a buy mode, preferably when it crosses B or C in a very strong technical move. Then it should still go to leg D, the requisite of the Chapman wave. And that's what it does. It goes to peak A on the 7th of June, higher high, peak B on the 11th of June, higher high doji 786.20 on the 20th of June, pulls back to the 200 period moving average. Look at that mauve line there. That's a really important line, support line. It touches it and it takes off in a huge move to a doji high of 820.50. Wait a minute. That's below the 825.10 high of the April the 30th, April the 4th. The 30th of April, sorry, I was reading that wrong. And now you make it left side. Look at this. Here's another technique. There's a left side, right side, price, time match. This is a technique that I teach and I show my subscribers in my opening call, my daily service. Every single day we look at these different techniques. And there's the Chapman wave inside wedge, the rising wedge. And that takes you right to, it was 1 day early and 4 points light with that doji high. So it pulls back where to? To the 200 period moving average. This is the E-mini, the Russell E-mini. And then it starts another A, B. Now it goes to a C. Technically, I should have called this E/C. Why? Because it did not break on this move down to trough B to 759.20. It didn't break below the starting point of 722.10 of the 4th of June. So that means that the buy mode power, in essence, the tide, is still in an up mode. And that up mode says, don't be afraid. You did pull back sharply on the stochastic, but the price held beautifully. And now it's making one of my least favorite patterns, the cup and handle pattern. I call it my least favorite because when you finally recognize that it's working, it usually doesn't have all that much more to go before it comes back and retests the handle. I love the Chapman wave cup and ladle formation because it powers through the left side lip and it goes to a D or an E or even an F. That's a much more powerful technique, chart pattern. So now this is making a handle, and it says, yep, I should try to go to the next level of 626 above 626.80, and that will say that because I'm above it, that could be, now I can definitely call it leg D, or E, or F/D. Both of them say, whoa, be a little careful here because if the stochastic is not above 80%, it could have another turn down. But look at the patterns that are forming. See the big cup? See the smaller cup? Left side, right side, price match. It breaks it by 1 bar. That's positive. Now look at the small little cup. That says, this is the one that you've got to watch because it says either it's making quicker and quicker cups and it's running out of power because it can't break significantly above the 625 level, or it says, watch this closely, because if I power through 826.80, that says I could very quickly go to somewhere around 829 to 830, 31, 33. Because if the stochastic goes above 80%, the MACD will improve as well. How will it fail? It'll absolutely fail. If it takes out, if the E-minis, the Russell E-minis, takes out 800.70 in the next week or so, that's very negative. It says there's another move coming down towards the 781 level. So I hope that gives you a little sense of the Chapman wave methodology. Basil Chapman sitting in for Larry Pesavento, and now we're going to look at, as soon as we get back, we'll look at Apple AAPL for Nancy in the Den. Basil Chapman sitting in for Larry Pesavento.
In just December of last year, the price of gold was down over 10%. In today's highly volatile gold market, you need someone in your corner that understands the complex relationships that exist within the price of gold, as well as within a variety of gold equities. Whether it's the South African gold miners and knowing how the Rand-dollar relationship will affect their bottom line, or understanding how John Paulson's $5 billion trade in the GLD can move the market, Tom O'Brien gives you the direction you need to become a better trader each week in his newsletter, The Gold Report. With over 20 individual equities covered and almost another 20 on the potential watch list each week, in addition to covering the XAU, HUI, GLD, and dollar, The Gold Report is a great source for any trader that is looking to be diversified in today's volatile gold market. For your 30-day free trial to Tom O'Brien's Gold Report, log on to tfnn.com today. Don't miss out on this great offer. Act now. You take a hands-on approach to managing your investments, and whether you're bullish or bearish on Chinese stocks, the ETFs from Direction Shares are there to help you magnify your perspective. Bull ETFs for a rising market and bear ETFs for a falling market. Direction Shares gives you the tools for both sides of the trade. Discover how we can help at directionshares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor Foresight Fund Services, LLC.
Millionaires are made every day. The fact is, living your dreams is possible. Someone, somewhere is going to get rich. My recommendation is, let that be you. Each day, someone is making the decision to better themselves and creating a plan to fulfill their financial dreams. Let that be you. The key to turning dreams into reality is to take massive action. Let that be you. I'm Steve Rhodes, co-host of the Money Master Show with Tom O'Brien, seen daily at TFNN, and I can help you with your journey to great wealth. I'll show you how to create the ultimate financial edge, a set of tools, insights, and strategies that are part of my daily newsletter service, Mastering Probability. You'll have direct access to me by phone, email, and my private library of trading and investing secrets for 30 days with an unconditional money-back guarantee. I'll take your trading to the next level. Click on my name, Steve Rhodes, on the homepage at TFNN.com and turn your dreams into reality. Mastering Probability, folks. Let that be you.
Kate Stalter's exciting newsletter, Low Priced Leaders, has just launched, and now is a great time to get a 2-week free trial. Every Wednesday afternoon, Kate sends out her weekly newsletter to her subscribers where she focuses on small cap stocks with market caps under $2 billion, as well as low-priced equities with share prices ranging from $5 to $12. Kate tracks a variety of stocks with a combination of strong technical support and solid fundamentals. Many of the stocks featured will be recent IPOs. These newer issues are often some of the biggest price gainers in the market and provide an excellent opportunity for substantial gains if timed correctly. You can catch Kate Stalter live on Tiger TV with her Small Cap Roundup every Tuesday and Thursday at 11 a.m. Eastern Time, and visit TFNN.com right now to get your 2-week free trial to her brand new newsletter, Low Priced Leaders, while locking in the low introductory monthly rate of only $37.50 per month, almost a 50% discount. Act now.
This segment is brought to you by Great Panther Silver. For more information, just click the Great Panther Silver banner on the front page of TFNN.com.
Hi folks, Basil Chapman sitting for Larry Pesavento. We're going to go to our first caller, but just 1 second. I typed in all the information for Nancy in the den about Apple, and since it's so important, let me just quickly go to that. Apple made a peak E-top at 680.87 on the 27th. Pull back. It has a pattern that I call the falling axe. It's a declining, expanding cone. It's gone above it. It's testing the low. And now what I'd be looking at is the 120-minute chart. The 120-minute chart says there's a good chance that Apple's going to try to go gently up to make higher peaks in 4 peaks in the 120 minutes. Is that peak B? If it goes to 676.36, that's going to be leg C. Then I anticipate leg D. I anticipate that it's going to go to D. If it does that, underneath 680.87, and then go sideways in this rectangle formation, waiting for the news. As it gets closer to the news, some news coming out on the 12th, I think it is, of next week. As it gets closer to that news report, so you'll see a greater expansion. The most important thing is if it cracks 681.50 on a close, it could quickly go to 685 or even 690. If it fails, it's going to. If it fails to hold 663, there's a good chance that it can go all the way to 657.25, the low of the 31st. So those are the parameters I'm looking at. If you're all long, I'd say I would put it on a short-term basis. I'd put a stop under 668.84. What you really want to see is for it to close near 676.35 by 2:30 this afternoon. That says, great, I can now maybe try for leg C up. Hope that helps. And let's go to our first caller. We've got Joe in Boston. Hi, Joe. How are you?
Hi, Basil. How are you?
Good, thank you.
Good. I got a little pairs trade going on. Long Google, short Baidu.
Oh, okay. So now let's see, because let me just finish this chart here. I made a lower low, so that has to be, just let me see, 680.64, 680.48, 680. Yep. So that was what I call a rogue wave G right there. Just going to put it into the chart for those looking at Tiger TV. And now we've got A. I believe that's, yep, that's B. C. I must have hit the capitals by mistake. So now what I've got is so far a leg A, a peak B. So let me just type that in. A, B, and so far I've got a C1. I've been talking about this all day. Isn't that interesting? C2, because it never broke to a leg D above 68.99. Yeah, 68.99, and it went to 688.58. So, okay, I'm ready for anything you've got. So we had discussed this before. We had said that so far Google was actually looking quite good, that the weekly had broken out. I had no other way to count it but to suggest that it's probably a leg B in the weekly chart, maybe a leg F in the monthly, but we don't have to worry about the monthly because it's the weekly and dailies that are most important. Right. It's holding the 9-period moving average in the daily. So now let me see. So you've got, so far, it's held beautifully. The fact that it didn't go halfway into the Roman candle wick of yesterday that had a high of 685.00, if it even started to trade at 678, there's a good chance it would retest the low of yesterday. Instead, it took out the high. That is a very positive move, but the day hasn't closed. So I want to see it close above 685 round number from yesterday. That's Google.
Yeah, if this can clear that say it gets into the 690s. Is that 700 on the table?
If this touches 691 to 693, most of the time when stocks get to the 70s, 75 area, they want to test the 90s. When they get to the 95 to 96, they like to go to the 103 to 105, 107 area. When they test that successfully, then it's the 120s. So you're adding a 6 to this whole darn thing.
I know.
So what I'm looking at here is that, a lot depends. I was talking about in the earlier show, I was talking about the euro. I've got the parameter set. Let me just do this if you don't mind. It looks to me like the 120-minute chart of the volatility index has made a doji high at 18.96, is now trading down at 17.33. If the volatility index takes out 16.56, the low of August the 31st at 4:15. If it takes that out, and if bonds actually don't rally but pull back and the TLT is at down 59 cents, if the TLT goes under 126, I'd probably say 125.90. I suspect that the stocks that have done best right now, and I'd even have to include Apple, are the stocks that are going to actually power higher very quickly. So can
you do Baidu after the break?
And I'm going to do Baidu after the break. Okay. So we're looking at a currency, not a currency pair, but a stock pair, long and short, with Joe. We'll be back with Joe and Ari straight after this.
Tom O'Brien's daily trading newsletter, Market Insights, has delivered powerful results for subscribers, and now is the perfect time to try it out for 2 weeks absolutely free. We're so confident in the value Tom provides his subscribers in his daily newsletter that through Labor Day weekend only, when you sign up for a 2-week free trial to Market Insights, we'll send you a free copy of Tom's best-selling book, The Art of Timing the Trade, your ultimate trading mastery system, completely free of charge. Will even cover the shipping cost. Cancel at any time during your 2-week free trial to Market Insights and pay nothing, and keep Tom's free book as a gift from us. This offer is only valid for new subscribers. We've only extended this offer once before, and it will only be active for a short period of 2 weeks. So act now to take advantage of this great offer and be ready to capitalize on a more active, more volatile market once traders return from their August vacations. All the details are on the front page of TFNN.com. Sign up for your free trial to get your free copy of Tom's best-selling book today. Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Recently, Basil Chapman has had some outstanding trades in his newsletter, The Opening Call. Each morning by 9 a.m., Basil uploads his newsletter to the TFNN servers so that his subscribers can access his expert trading advice. Basil gives his take on the direction of key indices and updates any active trades that his subscribers are currently in. Just recently, Basil's subscribers closed out a short position in Chipotle Mexican Grill, CMG, for more than an $86 profit per share, over a 20% gain in just one position. If you'd like to check out Basil Chapman's newsletter, The Opening Call, then visit the front page of TFNN.com and click Trading Newsletters. There you'll find Basil's newsletter, The Opening Call, where you can request a free sample copy. Also, don't miss Basil's program, The Tiger Technicians Hour, Monday, Wednesday, and Friday, 11 a.m. Eastern, on TFNN.
In just December of last year, the price of gold was down over 10%. In today's highly volatile gold market, you need someone in your corner that understands the complex relationships that exist within the price of gold, as well as within a variety of gold equities. Whether it's the South African gold miners and knowing how the Rand-dollar relationship will affect their bottom line, or understanding how John Paulson's $5 billion trade in the GLD can move the market, Tom O'Brien gives you the direction you need to become a better trader each week in his newsletter, The Gold Report. With over 20 individual equities covered and almost another 20 on the potential watch list each week, in addition to covering the XAU, HUI, GLD, and dollar, The Gold Report is a great source for any trader that is looking to be diversified in today's volatile gold market. For your 30-day free trial to Tom O'Brien's Gold Report, log on to TFNN.com today. Don't miss out on this great offer. Act now.
This segment is brought to you by Crocodile Gold. For more information, just click the Crocodile Gold banner on the front page of TFNN.com.
Hi everyone, we're back with Joe in Boston. We were looking at Google. So Google still looks positive. Now, and what I was mentioning before, Joe, as just to recap, for anyone who just tuned in, this is Basil Chapman sitting for Larry Pesavento. We're looking at Google, the stock, and Google was showing that it's still at upside capacity because the technicals were very strong, but we are still subject to how the market reacts over the coming day or two to the European the result. Well, we know it's not going to be resolved, but the discussion of resolving one way or the other the budget effects. So what we're also looking at here is that if the market takes a very strong downturn, then Google will probably pull back, but so far the technicals are hanging in there really nicely. Then the opposite is that you've got like a currency pair, one going one way, the other going the other way. You've got a stock pair. You've got the long side of Google and the short side of Baidu. Now, Baidu, and this is going to be very important, made a peak G-top at 134.71 the other day. There is no other wave count to it. In my CD introducing the Chapman wave methodology, I discussed these patterns, but normally in my Master Trader series, I spend a lot of time showing the difference between an instant restart that's going to go to another ABC C, D to the upside, or the potential for a peak F or G to occur. So this one decisively had the peak G, and at 134.71, it plunged to 110.13, and 110.27 was the low 3 days ago. So it's got the pattern that I call the dreaded H. Looks like a lowercase h. Stochastic's flattening out. It didn't show an upside turn, and the MACD's trying. The histogram's improving a tad. So this is what I'm looking at. So what I did is the greater tide in the monthly chart says that it made that 100.95 low in September of 2011 after the 165.96 high of September. And then it bounced, and then it retested, and it's gone to this 99.71 low, which is lower. So it's made a lower low, but it hasn't closed below it. So that's like a magnet. That says it might have to retest that. So the technicals are very weak in the monthly. Technicals are weak in the weekly. So I think you've got yourself the right combination. I'm going to give you just one little piece of warning, because it could happen intraday. The 120-minute chart made three peak Ds. It actually went to an E, the very last high at 134.66. Now it's plunged to the low. It's made a dreaded H, but it hasn't taken out the 110.13 level. It went to 110.27.
What if it closes below 110.13?
Now this is what you want to see is a decisive close below 110.
Right.
The reason why I say decisive close is that this pattern, the dreaded H that goes to a little M formation, has the capacity to break down, and the very same bar that breaks down, before you know it, says, I haven't said goodbye to all my friends back in the arch formation. And it has a quick rally that just confuses everyone, because it'll go back to about 112 to 113 and a half, and then it could come back down again. So that's the only thing I'm warning you. You want a close below, because if it does it intraday and then closes near 110.17, be careful, because that's the little visit that it wants to give back into the arch, because that arch has become a containment area. It doesn't want to say goodbye to it unless it says decisively, goodbye, Mom, I'm out of here.
Yeah, it just looks like there's a big seller in this stock.
You know, that volume that came in on the 23rd, that volume is saying you don't necessarily need volume to the downside, but if you close below that 110 level, everybody that was in it up until then is a loser.
Right.
So I read volume a little differently there, because the volume spike would have been a very big positive if you didn't pull back, but instead of the 200-period moving average at 119 being a repellent line, it actually closed above it even once. It closed at 119. I would have said, whoo, be careful, because that can last about 11 to 26 bars of moving up before it comes back to retest. So for you, this is a very big positive.
Do you have anybody behind me?
I do. I have Ari waiting impatiently. What were you thinking of? And I'll try to get to it if I can.
Zillow long.
Oh, okay. I'm putting it up. I'm not saying anything about it. Thanks for calling. I will look at it. It's actually a stock I wanted to buy. Didn't get into it. It's acting well. Thank you for calling, Joe. Ari in Arcadia, how are you? Are you there?
Oh, good afternoon, Basil.
Yes, hi. How are you, Ari?
I'm very well.
Good.
And so, still in with a SLW trade. I kind of wish... I'm looking forward for a good correction on it.
You know what? Yeah. I don't know if you noticed it, but did you see that you're in leg D in the weekly?
Yes, we are making the leg D now.
We're in the leg D. We haven't closed above the downtrend line in the monthly chart. Now, this is very interesting. I was going to do a little bit more on it tomorrow in the Futures Hour, Larry's Futures Hour. I've started doing it now. The SIZ... the December silver contract is in leg E. Very strong technicals. It's only leg B in the, I keep looking at this. If I missed something here. No, it's only leg B in the weekly chart. But the monthly chart looks much worse than SLW, because it's together with the SLV. There's been a tremendous pullback from the high of 48.35 in the iShares of the SLV. So this is what I'm looking at here. On a very short-term basis, I haven't done work on the SLV. Let me see. I've done it on the SIZ, I believe. No, I haven't. I've done it on SLW, I'm pretty sure. No, I haven't. Okay. The SLW 120-minute chart is in new leg A, B. But there's an alternate wave count that I cannot rule out, that it could be an F if there's a failure. My reading of what we're looking at says in the next 2 days, this is such an important phase, and I'll tell you why. In the SLW, silver wheaton is the stock we're looking at. It's trading at 35.15. It's only up a penny. There was a doji candle yesterday in the daily. 35.40 was the high. The stochastics made a little V-shaped pattern. It's come back to 84%, which is good. The MACD is sort of flattening out. It's got that pattern that I call the dolphin pattern with a little nose here. So I'm watching this really closely, because if this turns out to be a high-level consolidation, together, I'm going to try to put the package together with the GLD, which is also making a peak E if there's no new recovery high above 164.77 today, and also very good technicals, together with the EUR USD. We have seen often enough that the euro, gold, and silver actually follows gold, although silver in many ways has been a bit of a leader here, have gone together as the three bears, the VIXI, the bonds, and the dollar, have been kind of weak. So here we've got a crazy picture. We've got the volatility index near the 20 area. You've got the market still moving higher. You've got bonds having a fabulous move up, but it's just, so far you have to call it a counter trend rally, but it really has been a tremendous move. And you've got the dollar, which is just kind of hanging in there. We have to exclude that for now. So we are on the cusp of getting a lot of information. Plus, you've got to include copper, which is acting very well. So if for whatever reason the perception is tomorrow that at least for the foreseeable future, Europe is not an issue, and the Dow goes to 13,000, breaks 13,090s, goes to 13,130 or higher. The S&P goes to 1413 or higher. I suspect that gold and the euro and silver are going to hold pretty well. So here's the short answer for you, which I should have given right away, is I don't know if you've actually taken anything off yet or just kept raising the stop, which was the two suggestions I had, of taking a little bit off or raising the stop. What have you done?
I keep raising the stop.
Okay. I'm going to say continue, because $34, round number 34, on the 9 EMA will be key. If it closes sharply under 34, that's SLW, in the next, this might be independent of, silver might just pull back a tad, because, they in some ways they've decoupled just a little bit. So if SLW closes under 34, I would certainly say now you've got to take a little bit off. You might not even have to wait until then. You might even take a close under yesterday's low of 34.51. But this is the exciting thing. The weekly chart has only now made leg E. There is a doji, but this is only Wednesday. It's 1.5 days of trading this week. If the weekly chart can get anywhere towards 35.75 or higher in SLW, I'm going to put that together with the SLV because I know you watch them closely. If the SLV, instead of this little doji candle, is able to break above, it's at 31.27. If the SLV goes anywhere into the 31.58 to 31.63 area, that'll kind of be a recycle. So that'll be very positive. You can continue to raise your stop. So I love your trade. And the SLW has been far superior to the SLV, but at the same time, the SLV monthly chart is the one that really has me concerned. Everything about it, even the GLD, says that at some point we should get some kind of a pullback, and the GLD would say a close under 148 in the next 4 to 5 weeks will say we're going to go down deeper. But I cannot rule out that if the GLD goes to 160, it breaks above 167, goes to 168, it'll try to retest the 174 high of February of this year. So those are the parameters I'm looking for as a position. This is not even a trade anymore. You've got a position play. You've had a fabulous move up. I would certainly recommend, Ari, that if the SLW does pull back, I would at this point take a little bit of money off, and I'll explain why. If it pulls back and the stochastic slips under 80%, then you could see a sideways move. You might even have another trade at about 33.50 to 32.90 to maybe go long again if all the parameters hold okay in the weekly chart. So I hope that helps you.
Yes, it does.
And congratulations, you've really had a nice position play.
Thank you.
Thank you for calling. Folks, Basil Chapman sitting for Larry Pesavento. I was asked early last week if I would talk about stops and buy stops. I just never had a chance. Every time I wanted to talk about it, I didn't. I think I'd like to take a moment after the... I don't know if I heard the music or not. Did I hear music or didn't I hear music? No music. Well, I'd like to do that in this particular segment right now. There is something I learned a long time ago about stops, and it was a lesson that wasn't learned in one session, and it wasn't learned. Yes, he's keeping the SLV. That was a question in the debt. It wasn't learned in 2 sessions or even 5 or 7 or 10 sessions. It was learned over a period of time, because every time I thought I knew best, I got smacked on the nose. Now, let me explain exactly what I'm talking about. When I put on a position for my subscribers, not only do I put the position on, I immediately say, and that's the stop. And then the next day we will maybe change the stop or keep the stop. But that stop or the buy stop, meaning if I'm short, I want to know that if it goes above the level that I bought it at, or if it's much lower, I want to know where to get out. And the only way you can get out, because shorting means I haven't got the stock anymore. I've sold it expecting to buy it back at a lower price. If it goes against me, I want to cover at a certain point. So I always put those stops in. Now, drink of water. And let me explain. And I'm looking at a chart here on CNBC of the unemployment rate. I hope I'm going to be able to talk about that as well, because I think there's going to be a sudden surprise in unemployment in the next month or two. That's a surprise to the downside in unemployment, upside in employment. That's just my thinking. Now let's go to the stops. What I learned a long time ago is that if I bought something and then said, I'm going to make my stop such and such and such and such, I was vulnerable to making a change when it suddenly went there, and I said, oh, I've got a short-term position that I was hoping to get a quick whatever percentage or points, and now it's gone against me. Oh, I think I'm right. And then I would change my stop. I don't know how many times I've ever been successful in changing my stop and then having it succeed. Now, you might have heard me a number of times on my show over the years when someone calls in and says, I bought such and such at 87. What do I do? And it's now 67. And I say to them, did you have a stop? And they say, no, I didn't have a stop. I invariably say to them, if it gets back to your position, have a trading stop, but if it gets back to your position, you have no other alternative but to, at that point, take your money off the table and rethink your position, and you can go straight back into that position, which is with a fresh mind. I'm going to talk about that when we get back. I'll be right back. Basil Chapman sitting for Larry Pesavento, talking about stops and buy stops.
If you're an investor looking for a great weekly investment newsletter, then now is the perfect time to try out Ken Shreve's Ultimate Growth Stocks. Every Tuesday, Ken breaks down multiple sectors in his weekly newsletter, Ultimate Growth Stocks, with a full in-depth report including specific trading recommendations within his model portfolio, charts, sector analysis, upcoming economic data, along with intra-week trading updates on newsletter positions whenever the market dictates. Right now, you can receive a full month, that's 30 days, to evaluate Ken's newsletter free of charge to see if it fits your trading plan. At less than $75 per month, Ken provides you with his expert trading advice that can pay for itself in no time. Take advantage of this great offer by signing up for a 30-day free trial to Ken Shreve's Ultimate Growth Stocks today. Don't let this offer pass you by. Visit the front page of TFNN.com and sign up now.
With the launch of Tiger TV, TFNN has brought our programming to the next level. With Tiger TV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, Steve Rhodes, Basil Chapman, Ken Shreve, Kay Stalter, David White, Larry Pesavento, Victor Jones, or Carol Martin, you can catch all of our technicians hosting their programs live and archived on Tiger TV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out Tiger TV, then visit TFNN.com and see what you're missing.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com.
Are you looking for a precision edge in the market? Something that can stack the odds in your favor? Then look into Larry Pesavento's new trading newsletter, Patterns, Profits, and Peace of Mind. In each weekly issue, Larry explains what's going to happen in the markets based on the pattern he sees developing and gives you actionable trade ideas based on those patterns. Plus, you'll get his detailed analysis on a variety of markets and sectors, including stocks, treasury bonds, the gold market, oil, the dollar, the forex market, and more. And you'll get the Technical Corner segment, which is a short but powerful weekly training session on trading. You'll get access to all the patterns Larry is seeing in the markets, plus the Astro Harmonics and powerful Bradley stock market model that Larry utilizes for less than $5 a day. An extremely potent combination that will give you just the edge you've been looking for. Try Patterns, Profits, and Peace of Mind absolutely free for 2 weeks. Go to TFNN.com and click on the free trial link at the top of the page. That's an $85 value, yours free when you register right now. Get Larry's Patterns, Profits, and Peace of Mind and get the edge you've been looking for.
This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
Hi, folks. Basil Chapman here. I had a quick question as well, just during the break, about VWO, which is the Vanguard Emerging Markets. It's acting quite well in terms of the overall weekly. I'm a little concerned that if it's at 39.68, if it breaks under 39.37, it's going to retest the bar of 37.99. So it needs quickly to go above the 40.89 200-period exponential moving average. Hope that helps you. Now, talking about stops, what I found is that I personally like to have not percentage but point stops. I just prefer that because I'm looking at a specific level. It's not a percentage. It's just a line. It's a moving average or something, or it's a previous peak or trough or whatever. I like to use that. So and I'm sure there are people that have changed stops and have been very successful and changed their buy. I'm just saying I don't like to have something nebulous where I've got a particular position. Once in a while I'm saying, just for the day I'm going to change it, but by the end of the day, if such and such happens, put it right back. That's very specific. So in some, I do not like to change stops. I like to have it in right away. I like also to, if I'm wrong, I like that when it gets back I don't add to the position unless that was my plan, but then I wouldn't be wrong. I'd be looking for 2 or 3 positions on the downside or the upside to start entering small positions. Also, what I like is to know that if it's against me, I'm out as quick as I can. I don't want it sitting there. I don't know how many of you have had this where you've got one stock. You've really done well. And there's one stock that sits on you like pointing a finger. It's this little elf that sits, it's the trading guy that sits on your shoulder, which is you, of course. It's your conscience. And sitting there pointing a finger saying, damn, that was dumb. And also, I like to say, dumb. I like to say to myself, dumb. That was stupid. And then I've got it out the way. I can think clearly. I'm on my way to new trades. There are so many trades that you can do to make up a 3%, a 5%, even a 10% or 11% loss. Comes to 28%, 30%. I mean, you're just sitting there and you're saying, oh, gee. Oh. And it takes away from your free thinking of everything else. So this is just my own way of doing things. You could have a different way. So I've done this many times. For the E-minis that I trade very often, when I'm wrong, sometimes I forget. Sometimes I'm so busy. I forgot the other day I had a trade on. I thank God it went my way. I just forgot. Well, if you're that busy, try to get out of the trade so you're always fresh and clear, always. Now, the other thing is, I put something on. I thought I'd got out. I didn't. It pulled against me. When it got back to that number, and I knew it would get back to that number because of the technical situation, I got out. Do you know that I got right back in 3 seconds later? Fresh trade, and it worked. But it was a fresh trade. It wasn't a thank you trade. That's the way you've got to do it. I'll be back tomorrow for Larry's show. Get your commodity questions ready for tomorrow. Love to take your calls. By this time, we'll know a lot more about Draghi. Stay tuned. You've got Darryl Martin coming up.